It is time for the best time of the month right now, baby. Talking about the stocks to buy for the month of September. I waited a little bit, I know, but we had to find some good deals out here. And I think we've had a little bit of a pullback. We might have some good deals coming our way. So, here we go. We're starting off pretty easy. Believe it or not, I actually have Apple on this list. That's right. After the stock split, I have Apple on the list, and you may be wondering, why the heck is that happening? Well, I do want to point out, obviously, you see pre-market here. Again, we're recording this nice and early in the morning. Pre-market, the thing's down another 4%. So this stock has been getting hit pretty hard in the last week. Peaked around 137, dropping down another 12% since then in the past few days. So the valuation's obviously getting cheaper and cheaper, but it is still very high valuation. I cannot lie to you. Still a market cap over $2 trillion on this company. But first, we get into Apple in case you don't know what Apple is. I mean, I'm sure you have to. You know Apple for many of their products. Obviously, the Mac, MacBook Pro. You know, everyone knows the MacBook Pro. iPads. Everyone knows a nice iPad. iPad Pros, Airs. iPhone, obviously the biggest part of their business for now. See how I said that? Okay. And they're going to be in the next big cycle. First off, the iPhone 11 was a massive cycle for them. Once 5G iPhones release, it's going to be big for Apple. I don't think you can deny that. Apple Watch wearables is just an increasing segment as far as the whole market is concerned, and is the number one smartwatch in the market. Apple's dominant in the wearables category, so very nice for them. We obviously have the newly founded Apple TV with some bangers. Can't say if they're bangers really, but they've got TV shows that are, there's Tom Hanks on the left. He's 90 years old. There's LeBron James. Don't know where he's doing, but yeah, that's right. They've got TV shows. That's cool, I guess. Yeah, Apple TV is big. Obviously, it counts as their services, and services are a big thing. And with services, obviously, you get Apple Music, and including that, obviously, you talk about the AirPods category. Crazy stuff. As well as they own Beats. I mean, you got the Apple HomePod, kind of like a Google Assistant. What are those things called? Google Home. It's a HomePod, so there you go. But obviously, AirPods, the number one really wireless earbud out there. Can't believe it. They're bangers. I have obviously the discount version because, well, it's me. So of course I have the cheap version. But regardless, if you are a person who wants quality things, you're going to buy the AirPods because they're the best in the market. Just how it is. So, Apple, they've got everything to offer. But again, you do bring up valuation. I get if you do it. Because the valuation's very high. Can't lie to you. Trailing P of 37, nearly 38. Forward P of 32. It's high valuation for the history of this company. Price to expected growth, even 2.5. It's high. But the thing I like about this company is just the future value, and that's really the point I bring it up. Because I really do believe in the 5 to 10 year frame, this stock is going to be over the $300 mark yet again. Because Apple is a dominant beast, and it always will be. And you even see from a revenue perspective, right? This revenue is a continuously accelerating revenue to rapid degree, still accelerating fast. We're talking about big bumps, and not only that, but that net income line is beautiful as well. We're talking about this company bringing in $58 billion so far in the trailing 12 months period. That's pretty good. That's in the middle of pandemic, baby, or so-called pandemic. But here we go. They also pay a dividend. You have to mention it. Because why wouldn't you? Really only a small yield, 0.68% yield. Growth for 8 years. But payout ratio is super low at 25%. So it's worth mentioning that the dividend exists. Quarterly dividend payer. you got to mention it. And obviously, if you look at the balance sheet too with this company, 322 billion in assets with 225 in liabilities, stockholder equity of $96 billion. There's a lot of money on that balance sheet, I can't lie to you. But again, Apple, as I mentioned, just a dominant company, and that's why it's on this list. Next we have Irobot. You didn't see them. You haven't seen them in a while. Last time I recommended them, they were in the $50 range, and guess what? If you sold that when it reached $90, you would have been happy with me. Just saying. But who am I to say? But it's back on here for another reason. You know what? Because I'm searching for deals in the market, and Irobot, you're looking like a snack right now, baby. Okay, first you talk about the company itself. What is Irobot? Well, you know them for the robot vacuums most likely, but they also have the robot mops, the Bravas. So here's this product selection. You've got the robot vacuums, many series obviously. They sell bundles too, where you can get the mop and the vacuum, but obviously just the Brava mops as you look at that. M series, 200 series, 300 series, they're quality stuff. They learn in the room, and in an era of increasingly lazy people, which I don't think you can say that it's not. Increasingly lazy people. People are looking to not have to clean, and therefore this is the solution, right? This is something that learns their room. Now there is a chance, obviously, if you have pets, it will smear the fecal particles all over the ground. If that the dog or even cat, which would be rare, but decided to leave you a present on the floor, there's a chance you might have a nightmare on your hands. Okay? But that's what the mop's for. Woo! That's why you get the Brava mop. That's all I'm telling you. So, product selection, pretty nice on this company. And again, you look at forward PE, or really trailing PE of 23, pretty cheap still for a company right now. Price to sales under 2, 1.88, not too bad. Enterprise value to revenue, 1.69 is very cheap for the history of this company, actually. Very cheap, and I'll show you that obviously too, because we're talking about a company trading at a market cap of 2.19 billion, bringing in 1.2 billion in revenue. So not even 2 times that value in terms of the revenue they bring in. Revenue is pretty consistent. The growth is there. It's not rapid growth, but it is growth nonetheless. Trailing 12 months has been a little bit more rough, but we do see recovery is on the way. Net income line's pretty not beautiful on this company, but it is improving. But as you see from the most recent earnings report, they previously were guiding a decline in revenue annually, but now they are anticipating unchanged to slightly higher, which would be pretty nice to see that still with everything going on, to see that possible really nice deal. Now we'll see obviously in this next quarter after this coming up what that looks like, but again, this quarter, most recent quarter, was pretty beautiful. So that's it for Irobot. I think they're dominant in their industry, so that's why I like them. After them, you guys think I'm an old man. You think I'm an old man because I throw Cisco on here. Now, the whole point of this stocks to buy is looking for good value stocks. It's looking for good value stocks, and I think Cisco meets the criteria. It absolutely does. Okay? We talk about what Cisco is. This is usually, you probably think about it as a business's best friend, right? Everything to networking, to software, Internet of Things, mobile wellness, security, data centers, cloud. They've got everything for businesses. I mean, even telephones, they have products, they have the software, they have it all. So, typically your routers, switches, and wireless, all of this, though, for bigger companies, they're going to be using Cisco for these high-powered routers. Not only do you have that, you have product software, you've got stuff like telephones, you got everything from Cisco. They help businesses quite a bit, and security pretty big too. So that is Cisco for you. You have, as far as the data is concerned, market cap of $179 billion. Pretty cheap for the history of the company. That's all I'm telling you. Pretty cheap for the last little while. Forward PE, trailing PE of 16, forward PE of 13.85, Holy crap, is that cheap? From a P/E ratio, I think that is cheap. So total revenue, close to 50 billion. Still is some growth here, but it's not a massive growth company, as I mentioned. It's pretty steady. The net income line is what I think is pretty good looking. Sitting around $11 billion in net income off of a revenue of 50 billion it's pretty darn good. And again, $50 billion in revenue versus a market cap of 179 billion. It's a pretty cheap valuation, less than 4 times that there. So, and again, too, nice dividend on this company. Need to mention that. Nice dividend. Dividend growth for 9 years, under 50% payout ratio, and at a 3.5% yield is pretty cheap. I can't lie to you. I'm a big fan of the valuation, and that's why this stock is on here. And as usual, I end it with a speculative play. You know I love to end with a speculative, and this time it's a new one. New speculative for me. And this is as I mentioned with all these stocks, they're long-term picks. This one is a pretty very long term. That's what I just said, pretty very long term. It is Watt or Energous stock. Now, some of you may have heard of this company, some of you may not, because this is the ultimate in speculation. Ultimate. Looking at the company itself, they are, well, known for wireless charging. Now, this happens in many forms, from radio frequency waves to obviously just your general charging over the air is pretty interesting. So not only do you obviously have your at contact, everything going on there, so obviously placing your phone on top of a charging pad, whatever that might be, but this does over the air as well. So this is going to be, you place your product near it, and you can do over the air. Now this isn't really a consumer product right now, and that's why this is a long-term play. Eventually, this will be a long-term, we're talking long-term, this will be a consumer product, and if they have the ability to patent this out, this could be massive for this company. Obviously looking, the most recent product launch is the EN 7410M. Incorporating devices such as smart speakers, medical devices, laptops, tablets, and other devices such as fitness bands, smartwatches. They're focused on really improving, and the company's doing a lot, but again, they're going to need a lot of financing in the future, and, well, we talk about valuation, and it's horrid for this company. It's horrid. Price sales of 400. Yeah. Market cap of 129 million, but you got to notice the company only brings in $210,000 in revenue. So it's not a consumer product. Again, they make their money entirely off of contracts right now. So if they're not having contracts, that's not good for them. But we do see they have just recently partnered with Zentris Wireless to develop a ruggedized product for demanding military applications using Energys's radio frequency-based charging. So again, Energys is going to be a big part of this, which is nice. A contract with the military basically is pretty good for them, and that's a contract they need. So again, you look at the stock, and I just think about the future of what this could be. Now, this could be a company that goes under. There's no doubt. Obviously, a money loser. The company's not profitable by any means, and they're not bringing in much money at all to even warrant that. But 52-week high of $4.58. Right now, it's at $3. I think if you're looking 10 years down the road, you're going to be a happy man with this stock. And again, I've said the same thing with companies like Neo, which took a lot less than 10 years to become a happy man with that stock when I sold for a 700% gain. But who am I to say? Just regardless, I hope you enjoyed this and you have a great one.